Well, good evening, everyone. Welcome back to the channel. So we're going to try something new this evening. We're going to start having portfolio reviews for willing subscribers. So luckily, we've had a volunteer to help us get started, who was nice enough to share theirs. And I will go ahead and do the coach's review of that one. So overall, I was pretty impressed. Let me share the screen here. I've got it up on a separate screen over here. Let's see, where did it go now? So the first thing that stood out to me was Amazon stock, which it looks like the person bought at a pretty good price. So let's see. Okay, here is the. I have it zoomed in here. There's a lot of individual stocks in here actually, which looks really good. From what I've looked at, I haven't seen a bad pick yet. Okay, here it is. I have it up as an image. So okay. Starting off with Amazon, it's almost a quarter of the portfolio. Bought at 138, current price 169, 22% rate of return. That's awesome. Microsoft, 9% of the portfolio. Bought for 347 up to 406. That's an awesome holding as well. I think that's what two of the Magnificent Seven right there. IIPR, I don't know much about that. That's 8% of the portfolio. Average cost, current price. Wow, so the first three right out of the gate are up. So IIPR, let me check that one out. Typically, when I've never heard of something, it means, it can't be any good if I've never heard of it. That seems to be logic or lack thereof, that's all too common. Of course, that's a joke. I say that as a joke, but I hear far too many people say that in a serious way. So, innovative industrial properties. Okay, so let's see. I'll only review the ones I've never heard of because the ones that I know of, I obviously know they're good. So this one looks like it's undervalued based on Yahoo Finance. Pays an 8% dividend. Let's see. How long has this one been around? Earnings date is coming up here towards the end of the month. Okay, so this has had a big run. Wow, December of 2016, so like 7 years ago. This was at 1647. We ran all the way up to 279 in the 2021 highs. So this one, we'll see. This one may have a lot of upside. Is this a REIT? They beat earnings the last 4 quarters. This must be like a REIT or something. Let me look at the company profile real quick. Let's see. There's a lot of them, so this could be like probably a 20-minute video or so. But let's see. Okay, of course Yahoo's gonna, I'm not even sharing Yahoo. Let me do this here. We'll share Yahoo and then we'll get right back to the portfolio. Actually, so the next two, the one after IIPR was VICI. We're gonna look at that one as well. And then the next one is Tesla. Tesla, I think everybody that owns Tesla is in the tank unless they bought it in like 2017. I mean, even I'm in the tank on Tesla. I actually use some of my Tesla dividends to buy Tesla. Okay. I see a couple comments. I have another interesting person that keeps showing up on my live streams, but we can't showcase a name like that. So I unfortunately can't highlight those comments. But anyway, so IIPR, it is a REIT, industrial REIT. And like I said, according to Yahoo, it looks like it's undervalued by at least $20. It peaked at 280. And overall, it looks like it's, 8% dividend. It's got room to run. So that looks like a good one. VC, this is pretty good, I have to say, for our first portfolio review here. This is a pretty good one. This it's not common to do like your first like portfolio review of a subscriber and to have it, so good. I mean, it looks good so far. Okay, VICI Properties. This must be another REIT. It pays a 6% dividend. So there's a lot of good, like, stable dividend holdings here. So that complements some of the growth stocks as well. $30 billion market cap. Beta is, how about this? A lower beta, lower risk than the overall market. This one has been around since 2018. I'm assuming this one pays like a steady dividend. Earnings per share is on the positive. Excuse me. And like I said, I'm looking for more volunteers to share their portfolio. I'll be happy to review those. 2 out of the last 4 quarters, we've missed earnings. Let me do this. Before I go back to the actual portfolio, I'm going to pick the ones that I haven't heard of. Oh, he's got Moat. We've never, I actually covered Moat yesterday. That's 4.3%. Buy price 76.50 up to almost 84, up 9.75%. Meta is crushing it in Meta, up 25%. That's awesome. SMCI 33.5% up. That's the one I think we've been talking about on my Discord, haven't we? Oh, welcome. So we'll read most of the comments here. Oh, welcome. Yeah. All right. So okay, SMCI is the one that we've been talking about on the Discord. So we'll look that one up. SMCI. Now my concern on this one is, oh my God, whoever the person was that said this was like $500 the last time I looked. It's gone up another like $250. This is crazy. I didn't want to spend $500 on it, but it's $740 now. Wow. I guess the person knows what they're talking about. Look at this. Since October, this is like a 3x straight line up. Super microcomputers. What's causing this one to drive up so much? So look at this. Since the beginning of the year, this must be the hottest stock of the year. From 292 to 740. That's incredible. Well, to the person whose portfolio I'm reviewing, you'll have to update your numbers here because you probably did really well today. That's incredible. I don't know if I've ever seen this. Look at that. This was obviously the earnings date here. We had a straight shot up. Dang, if I had known about this, of course, hindsight's 2020, I would have definitely done some options on this one. This would have been a fortune. Wow. Well, that's a good one to have in the portfolio. Okay. Let's see what's next here. Okay, we know about Moat, Apple. He's up 5% in Apple. DKNG. This looks good. I got to tell you, to this person, you seem to have a good portfolio here. Let's see, how many stocks do you actually have? You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. Oh, that's funny. You have the cells here. Why am I counting by hand? Looks like you have 34 stocks. Nothing like the coach using airtime to count by hand, right? This is funny. This reminds me of my early portfolio. I had like 40 individual stocks. And of course, some of them went bankrupt. Some of them were like 3 to 5x. So, somewhere in between there. Let's see which names I recognize. You've got, well, here, let me do this. Let me just reverse what I said a minute ago. We'll look at this, and then I'll look up on Yahoo the ones that, there's that commenter again. Yeah, I just can't, entertain comments with a screen name like that, unfortunately. Okay, where was I here? Okay, so back to the portfolio here. It looks like he's got, is this Comcast? Did they split? This looks like, there's some familiar names here. Is this Twilio? Or no, I'm trying to remember what this one was. There's the VU. He's up 13% in the VU. LMB, TM, POWL. Oh, CRM, Salesforce. Salesforce just had good earnings. VGT. There's Pepsi, a Warren Buffett favorite. CROX. Oh, no, there's Twilio up there. I knew I saw it somewhere. Google. I wonder, to this person, how do you pick your stocks? Are you subscribed to some service, or I'm wondering what makes you pick these, because I see, a lot of them you're doing really well in. There's Google, up 6.64%. Datadog, up almost 20%. This is Visa, V for Visa, not V for Vendetta, but V for Visa, which one of the commenters here seems to have a vendetta against a certain channel. Berkshire Hathaway. Oh, wow. Look at that. You've got B shares of Berkshire Hathaway. That's not a cheap one. That's Warren Buffett's company, of course, 11%. Ally Bank, 34%. DKNG. What does that sounds like? Donkey Kong or something. I know that's not what it is, but let's see. All right, we'll look up the ones that I don't know of. There's, of course, Apple, Moat we looked at yesterday. I really like Moat, actually. Okay, so we will look up DKNG. That'll be our next one here. Okay, so here we go. So after we went over super micro computer here, DKNG is, DraftKings. Oh, of course. Yeah, I know what that one is. Duh. 43.38. I almost feel like you must subscribe to Motley Fool or something, because a lot of these are, they had a good run. I will say they had a good run, but I don't know if they're worth their little fee at this point. Okay, let's see. 5-year view. This one peaked out at 61.53 in 2021. Wow, we dropped all the way down in 22. We dropped all the way to $11. So we've been on a straight run upward since there. They have earnings on February 15th. Okay, let's see. Which other ones are we going to look at here? We'll look at GCT, Twilio, and then CLS. So I would say to this person, I don't know how much of your net worth is tied up in this portfolio. I would have to say, you might be a little bit overexposed to individual stocks. Now, if this is maybe, 10 to 20% of your overall net worth, then I would think that you're fine. But like I said, I'm a big fan of broad market index funds, at least for the bulk of your investments, because you really can't go wrong. You have a large cap one, small cap, S&P, NASDAQ, tech. You really can't go wrong with those. Like for me, the bulk of my net worth is in index funds, and they kick butt over time. Like I said, my big 401k was up like 40% last year, and the new one was up like 30%. So I'm certainly not doing that with Yield Max. By the way, I noticed no Yield Max in this person's portfolio. How about that? Not that I saw anyway. There's no Yield Max here. So very interesting. I think this person has a good head on their shoulders. Not to say that people that invest in Yield Max, which of course includes me, not to say that we don't have a good head on our shoulders, but let's see here. Okay, no new comments. All right, where were we? Oh, GCT. Okay. GCT is GigaCloud Technology. Okay, this sounds like a good 21st century stock. It looks like it's about fairly valued. Let's see. Since 2022. Oh, we're down from where we started. But look at where we dropped. We dropped to like $5 or $6, came back up here, and then we're starting to surge here towards the end of 2023. So this looks good. Let's see, as far as earnings, let's see how they're doing. They're beating earnings 4 out of the last 4 quarters. I'm not sure why December isn't updated yet. But anyway, okay, and then Twilio. This is one I haven't looked at in a while. So Twilio is 71.60, up $1.24 today. Oh, they're losing money. It looks like earnings per share is in the negative. If I go out to the maximum, how are we doing on time? So we peaked out in 2021, and then we've fallen from there. But who knows? Once we start cutting rates again, we might see a big run up in all of these again. Okay, so what is next here? Oh, CLS, CROX. I'm going to start to try to breeze through these here. Okay, come on, Yahoo. CLS. CLS. Celestica Inc. Okay, 3866. Right on par with the 1 year target estimate. Oh, this has been around since the 90s. Look at this. We peaked out in 2000, $78, crashed from there. Look at these. All of your stocks. Wow, you're doing good. All of your stocks are like on a run upward in the last year. That's awesome. Okay, what is our next one here? Okay, I got a couple more of you on. Yeah, feel free. I'm definitely taking volunteers for this portfolio review series. Okay, Pepsi we know about. MOD. Oh, CROX. Let's look at CROX really quick here. CROX. Oh, Crocs. Okay, that's 107.54. This seems like a good, like a growth company that you can't go wrong with. A lot of earnings are coming out February 15th. How about that? Okay, so what do we got here? Crocs peaked out at 164, fell down from there, came back up again, and then dropped a little bit. Looks like we're kind of in a holding pattern here as far as earnings. I've never actually looked at Crocs before. It's funny. As far as the stock, I mean, I see them around all the time. But, okay, 4 out of the last 4 quarters, they beat earnings. Wow, this is looking good. Okay, what other ones are we going to review here? Let's see. You got a lot of them here. All right, let's see. MOD. We'll look at MOD and then VGT. Honestly, the other ones, there's only a couple of them that are slightly down, and I think these are all going to recover. I don't think I need to look at the rest because this looks pretty good. I think all of these are solid picks. Okay, and like I said, the only thing I can really see with this is that it depends on what percentage of like your overall net worth this is all tied up in. It may be a bit overexposed to individual stocks if this is a big portion of your net worth. If not, then I would say nothing to worry about. Okay, let's look at a couple more. Oh, I know what this TTWO take two. Yeah, that's a good one. APP. Let's look at. We'll do like 2 more. We'll look at MOD and then VGT. Okay, so MOD, and it's refreshing in a way because this is a non-yield max portfolio, so that's really cool. Modine Manufacturing Company, sounds good. Okay, PE ratio seems reasonable. Market cap. Look at this again. This person has a pattern here with their since. This is 2021. This is a rarity because most stocks seem like they peaked in 2021, but this has been straight up. If I go to the 5-year view here, this one has been, especially look here towards the end, towards 2023, this one 3x'd. Wow. That is awesome. I feel like a lot of these are like Motley Fool stocks. Maybe it's worth it for me to subscribe again to them. I know I was subscribed during the pandemic and they had a lot of misses. They had some hits, but a lot of misses. I missed the boat on Mercado Libre, of course. And then what was it? IQIYI. That one was a hot one for a while, but then China got crushed. Again, look here. See a pattern? 4 out of 4 quarters beating earnings. I may have to take some tips from this portfolio. But I'm always, I think a lot of investors, not just me, but I think everybody's always afraid, like, oh, if it's a 52-week high, do we want to buy in at a 52-week high? But remember, if stocks are not hitting their all-time highs, they're not growing. And they should be hitting, it's not a bad thing. They should be hitting 52-week highs, right? Okay, back to this. We'll do one more. Let's see. We will look at VGT. The other ones I trust to be about the same. So let's see, VGT. Vanguard Information Technology. Oh, there's your index fund. See? How about that? Vanguard Information Technology Index Fund. I bet this one's kicked butt over the last year. Let's see. Over 5 years, we're going to look at. Wow, from $200 to $521. That's awesome. How about that? That is awesome. Slightly, how about this? It's above the NAV. It's above the NAV. 401. So we've been on a tear since October 23rd. Wow. Awesome. I would have to give this portfolio an A. I don't really see any flaws with it. So great job. Keep up the good work. Anyway, all right. So we went for about 20 minutes there. We'll look at some comments here. Certain comments, that is. Okay, let's do this one. Yeah, nice. Yeah. Yeah, welcome. Yeah, IIPR. That seems like they honestly they all seem pretty good. Richard King here says greetings and salutations. Yeah, thank you. LPG. We're not going to look at any ones that aren't in the portfolio because I dedicated the video to the portfolio. So anyway, all right, you all. Thank you for tuning in. I look forward to doing more of these in the future. Like, comment, and subscribe if you haven't already. And oh yeah, Pepsi. Yeah, Pepsi. Good defensive one. Yeah, that's always a good one. All right, you all. Thanks for tuning in. We will see you all very soon. Take care.